Alrighty, let's try this again here. Tim Manfro, aka Mortgage Manfro, just had some technical difficulties. Hopefully those are worked out. Coming to you guys today to share some very important information. Probably a very exciting time for most people right now, especially people in the mortgage and real estate industry, and even homeowners or people looking to get home loans. Basically, rates are at a 13-month low. Okay, so we've seen, everyone's been out there, and I was, guilty of this also, being out there saying rates are going up, they're going to go up, which is all the information that we were seeing was saying that, right? So I'm out there preaching that rates are going up, and then lo and behold rates drop. They go down crazy. They've took a big dip over the past 2 weeks. And we're seeing some of the lowest rates since, over 13 months and coming down from a huge amount from the November, December highs that we've had over the past 12 or 13 months. So I want to take some time and answer the biggest question that I'm getting. And this was before the rates drop, but now this is even more of an important question to go over. And that question is from people looking to buy houses saying, hey, should I wait to buy till prices come down? I feel like prices are high. I feel like the prices have gone up so much. All these different things. And a lot of people say, yeah, it's a great time to buy, but no one really is sharing these numbers with people, especially with the rates as low as they are. And I feel like it's super, super important to get this information out to clients, to people looking to buy houses, people on the fence, to real estate agents, to talk with their clients. And so I'm taking the time out right now to blast this out to all you guys. And I want to share some actually numbers with you as opposed to just saying now it's a great time to buy, okay? So, like I was saying before, so rates have came down from the highs of November, December. So I wanted to share some numbers with you. Okay, and I'm going to try and post them below on my Facebook post here and see if those will come up. Okay, so I just posted those numbers there below, okay? But basically, what's happened is, the prices of houses are what they are. We know what those are right now. That's what the market's doing. Now, a lot of people are saying, I want to wait to buy, okay? I want to wait till the prices of houses come down. But what they're not really understanding is how much the low rates that we have now are going to actually affect the price that you pay for the house over the life of the loan, okay? So let's say a house is scenario 1, which is posted below in this video. Let's say a house is $750,000 right now, okay? And you're getting a conventional 30-year fixed loan. You're putting a down payment of 20%. So right now, depending on the situation, you could get somewhere in the low 4%. So let's say 4.25%, okay? That is going to generate just a principal and interest. So this has nothing to do with the taxes, the insurance, all these other things. Principal and interest payment of $29.51, okay? So that means, believe it or not, which a lot of people don't even think about, over the life of the loan, the principal and interest payments that you're going to pay over 30 years is $1,062,590.40, okay? Numbers are below. So that's a payment you're paying over the life of the loan, okay? Now let's say rates were to go up 0.75%, and that's going to say maybe that rate is going to go up to a 5% rate, okay? And that may sound crazy, but just in November and December of last year, we had rates for this exact scenario that were in the high 4s or even 5%, okay? And it doesn't matter, different lenders, different banks, different rates, all these different things. It doesn't matter. The rates are moving if they were to move up 0.75%. So if you're to buy the same house, but the prices of houses drop 5%, okay? So let's say that probably is not going to happen. That's a big drop in a short amount of time. Like, the normal up and down of real estate is maybe 2 to 3% a year. But let's say for some crazy reason in a short amount of time, the prices of houses drop 5%. So now that 750 house is now 712,500. Okay, so the prices came down. You're still putting 20% down, but you're going to have a 5% rate. Okay, because let's say the rates go up. Now this is just assuming that happens, but I just want to give you guys some numbers to work with. So now your payment is $3,059.88. Okay, and that means the total life of the loan, the principal and interest only you'll pay over 30 years is $1,101,556.80. Okay, that's if you just make the minimum payment over the life of the loan. Okay, and then that means that if you wait to buy, you're actually going to be paying $108.24 a month under this scenario. Now, obviously, we can't see into the future. We don't know what's going to happen. But that's just a breakdown. If the rates did go up and the price of houses came down, we're going to see the payment for that house, which is what you pay for the house per month, going up $108.24, okay? Which isn't a lot, but if you take that and you were to keep that loan for 30 years, you're paying $38,966.40 more for that house because you didn't take advantage of the low rates that we have right now, okay? So that's a huge swing. And that just shows you, like, waiting could really bite you in the butt. Even if the prices of houses go down and the rates go up, which is usually how it happens, you're going to be paying more per month and more over the life of loan for the house, even though you got it for 5% less than it is right now, okay? Now, a lot of you, so just hold this up. I don't know if you can see that or not. The information's below. You can take a screenshot. I'd be happy to email this to you guys too. Now, a lot of people are saying maybe, okay, that's for a $750,000 house. Like that, that's not my price range, or I'm not interested in that, or my clients don't buy houses that are that expensive. So let's take a look at like an F.H.A. loan, okay? So let's go with the current rate and home value environment right now that we have. Let's say a house is on a 30-year fixed F.H.A. loan. Let's say a house is $350,000, okay? And you're putting a down payment of 3.5%. Let's say the rate is somewhere in 3.75%, okay? Just throwing a rate out there. That's somewhere in the range that you can get today on an F.H.A. loan. Let's say the principal and interest payment on that, so this is not including mortgage insurance, taxes, home insurance, any of that, just the principal and interest is $1,591.54. And the reason that I'm only focusing on the principal and interest is because that's what the interest rate affects, okay? So the total principal and interest payments over 30 years is $572,954.40, okay? So let's say under the same scenario we were talking about before, that the rates were to increase by 0.75%, but the prices of homes go down by 5%, okay? So now that $350,000 house is $332,500. Okay, so it's gone down in value. You're still putting 3.5% down, but let's say the rates do go up 0.75%. The same thing. Now the FHA rate is 4.5%. Okay, so your principal and interest payment is going to be $1,654.15. Okay, so that means that the payment would actually go up by $62.61. Okay, the total principal and interest payments over the life of the loan, $595,494, okay, and 0 cents. So that means that if you were to keep the loan for the life of the loan, never refinance, keep the same rate, which I know is unlikely, but this is just an example, you'd be paying $22,539 more than you would if you were to buy the house right now with the lower rate environments, even though if you feel the prices of houses are high and are going to go down, okay? So this is like some super important information. I really feel like everyone needs to be checking this out. Everyone needs to be sharing this information. Everyone needs to be having these conversations with their clients, or just having those conversations with the lender, or just thinking about this yourself. If you're on the fence and waiting to buy, the rates are insanely low. There's no way to tell what's going to happen in the future, if they're going to go up or go down, but we've seen them drop. We know what they are now. We know what the price of houses are now. It really is making sense. If you're feeling like you're going to wait, you may be kicking yourself later because the payment's higher and you're going to be paying more for the house if the rates do go up. Appreciate you guys taking a second to watch this video. Always love sharing this information and value. You can reach out to me for more information on this. I'd be happy to talk to you or any of your clients, and I'd be happy to email over this information to you or figure out any other scenarios for you. So have a great day, and I'll talk to you very soon. Mortgage Manfro out.